G'day everyone, welcome back to Pete's Investing. Today is May the 9th, 2023. This is the US S&P 500 update. We've got the weekly showing a neutral positioning on trend, and the daily is showing a long positioning only. However, I suggest wait till the weekly and the daily are aligned before taking any trades on the lower time frames. So let's look at the weekly first. So again, for those new to the channel, we look at the weekly share price, the triple moving average, which is 3, 5 and 60. And on the CCI 150, we look at the moving averages 5 and 50. When they're both aligned, like they were during those weeks, we'd go long, or when they're both aligned going short, like is in those weeks, we go short. Where it is at the moment, they're undecided, meaning it looks like the price chart or the moving average of the price chart are moving up in a bullish momentum, whereas the CCI is broken to the downside, so ever so slightly, if you can see there. So it's struggling to keep its head above water, but it's still showing a negative or a neutral positioning. So avoid trading long or short at the moment. On the daily, similar story in terms of what we're doing with the indicators. This is showing a bullish movement. So again, if I zoom out, you'll notice there's the price has been fluctuating in this range between this band, this support and this resistance. Support at 34.90 and resistance at 41.93. And it's currently resting on this diagonal ascending trend line. Now, it did actually break below this trend line a couple of times, but it's recovered back to the top of that trend line. But it's also, I've got this descending trend line as well. So if it does collapse, it may break down to this descending trend line. So again, avoid trading at the moment until we get a weekly and daily alignment on the indicators. Now, on the hourly, again, you can trade in a lower time frame, but I'm showing you the hourly as an example. If you were to trade, if both weekly and daily were showing long positioning, then you would trade when the candle breaks above the fractal, like it did there, like it did there, like it did there, and so on. So, and avoid going short, obviously, if it's showing the weekly and daily are showing long positions, and vice versa. What I've also got here, if I zoom out, I've got the this back testing for all these trades going back to September 21. Now you'll notice all these single blocks, that's a single entry made and an exit with one contract. Where there's multiple steps like that and that, it means there's 2 contracts entered, 3 contracts, 1, 2, 3, 4 contracts entered, and so on. Notice the drawdown effect for each of those. When the price goes against you, that's called a drawdown. So that's your profitability chart, and your profitability started there and it went as far as that point there. So that's called a profitability drawdown. What I want to show you is, you'll notice, if I move the cursor there, you'll notice on the weekly chart, this area says do not go long. So you would not have traded these periods had you followed the weekly trend indicator. The first area to go long would have been, more recently, would have been, you notice that grey vertical line on the hourly chart. That would have been the first point you would have gone long. And then probably a week or two later, you would have stopped trading at that point until the price started moving again and adding to the position again from there. So you would have avoided that little drawdown with 2 contracts as well. You might have entered one. You would have held that position until a positive or a long position was made available again based on the weekly and daily. So to understand how to trade this and other trading strategies, reference the links in the Patreon page and the links in the description below for exclusive access to weekly stock scans. We average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.